We're incredibly excited to have you here today. This event will give you some incredible insights on your business and what business credit is. This is part of a partnership with Envision Credit Union that is backed by sponsorships and scholarships for our entrepreneurial programming at Domi Station. We couldn't be more thankful for Herschel to be here with us today. And to get us started, we're going to go around the room and do quick introductions. So, one breath, who are you and what you're all about? Let's go ahead and get started with Lisa Welsh.
Hi, my name is Lisa Welsh. I am the owner of Vitality Farms Company. We are a local microgreens farmer who's trying to change the way the world eats vegetables.
Wonderful. We're excited to have you here. And Antonio Manola.
Oh yeah. You want me to
Hey,
turn it over?
sorry, I was just going to introduce myself. My name is Antonio. I'm a student at the Jim Rand College of Entrepreneurship at Florida State University. I am the co-founder and CEO of Private Receipt. We're trying to revolutionize the way that customers receive their receipts at the checkout counter, an application that centralizes your expense data. Great to be here.
Wonderful. We're excited to have both of you here, and we'll do quick introductions of the team. My name's Robert Blackers. I'm the Director of Entrepreneurship at Domi Station. Our goal is to support you accelerate what you're working on in your business through a diverse set of entrepreneurial resources. Looking forward to help you grow your business. Harley, go ahead.
Robert.
Hi, I'm Harley Johnson. I'm the Incubation Program Assistant. I help Robert put together these meetings and make sure that they are executed flawlessly. Bill, if you'd like to go.
I'm Bill Lixon. I'm the Executive Director at Domi Station. Our mission is to grow a diverse group of entrepreneurs across a diverse group of industries. So thank you so much, Herschel and Envision, for sponsoring this and our scholarship. So we're extremely grateful. And with that, I'll stop talking. Laura.
Hi everyone, my name's Laura. I'm the co-working manager at Domi Station. We help to facilitate a collaborative startup community within our space while also empowering entrepreneurs to grow their businesses. And I will toss it over to Kara.
Hello everyone, I'm Kara. I'm the Executive Administrative Assistant here at Domi, and my goal is to support everyone in any way that I can. So with that, I guess we'll go ahead and get started.
Well, again, we are incredibly thankful to have Herschel here with us today. I think you will learn a tremendous amount about business credit and beyond. Herschel, go ahead and take it away.
All right. So welcome, everybody that was able to join us. My name is Herschel Holloway. I'm the community development manager for Envision Credit Union. So that title comes with a number of responsibilities that I carry for the organization. One being a financial education. That's on either on a platform for those that are in financial hardships, be it a family, be it an individual, or be it a specific group of individuals. As a financial counselor, I have the ability to really truly digest what those hardships are and start healing from the outside in, right? I know that sounds a lot like religion, but in reality, it truly is, because I have a passion behind what I do, who I do it for, and why I do it. And I can't tell you how thrilled I am to be a part of this conversation. This has been a long time coming, and I'm so incredibly excited to have the opportunity to share some information with one of the target markets that I specifically work with, and that's aspiring entrepreneurs and businesses that are already up and operating. You know, oftentimes I hear in the realm of the financial arena some of the constant struggles that are often mentioned with businesses that are looking to either start an operation or expand the operation. And that big thing is often surrounding capital, right? And if you aren't familiar with what capital is, that's going to be one of those conversations where you and I are going to have to go into fine detail and start from the foundation up, because there's layers to building a successful business, and part of that is having the working capital to answer the demand for whatever product or service it is that you're offering. I'm going to jump over to a quick slide here. Bear with me as I get this guy ready. How businesses use credit is going to be probably one of the many things that, and I'm hopeful that you can see my screen. Can you see my screen, everyone?
Yes, we can see it.
You can see my screen?
Mhm.
Bear with me. Some of the, like I shared with you before, some of the things that's often missing is working capital for a lot of those aspiring entrepreneurs. And it's difficult at times for one to understand what that means coming from a consumer world. Credit is huge in whatever endeavor it is that you may be seeking, be it a small term financial goal, be it to save and purchase an automobile or purchase a home, or be it to start soliciting some type of financial assistance to start your business, be it a lawn care business or some of the other businesses that I heard from some of the entrepreneurs on the webinar call. Credit in the business world is just as important as it is in the consumer world, if not more important. Some of the challenges that you'll continue to hear is, well, I've been declined or I've been denied access to financial assistance from an organization because my consumer credit or my personal credit is compromised or it's low or it's challenged or whatever the case may be. But typically what I often see is that a lot of new business owners usually use their consumer credit or personal credit to prop the success of that actual business that they're hoping to grow or even start up. That can be a considerable challenge whenever you're moving into starting to approach institutions for larger sums of money to be provided to you. I encourage those that haven't, don't. Reach out to a financial expert and see what those different avenues and tools and resources that you can use to obtain that business credit in order for your business and your personal credit to be separated. I'm going to use a term that's called guarantor, and we're going to jump to the slideshow here in just a minute, but there's so much to discuss and so much to talk about. It may or may not be covered in the slideshow, but this is an open platform for us to engage with one another. And we'll have that opportunity here at the end of this presentation in the next 20-25 minutes to really truly open dialogue and see if some of us are experiencing the same challenges, what successes we've had with overcoming those challenges, and really network through dialogue and see if we can help one another. Not only Domi being the incubator of success, but each other possess a level of line of success that we could use, learn, and grow from as well. So don't be intimidated by someone that may be on this webinar or someone out in the community that you see as approach them. Do not be bashful. Ask, because without an ask, you'll never know. Today, you're going to be learning about what credit really truly is. It's a 3-digit number that's provided to both consumers and business owners. It really truly defines what your integrity is behind payments as well as credit usage. And that's huge. That's huge. It's 3-digit algorithm. It's a number that comes through an algorithm that's often spit out based on your payment history as well as your credit usage. You'll understand the different ways small businesses use credit. Okay. You'll explain why businesses use credit and know the difference between know the different forms of credit that businesses use whenever they're attempting to apply for business credit in itself.
Right.
Credit is a contract or an agreement between a borrower or a lender, right? Which the value of the lender provides something of value to the borrower. This is textbook definition. I'm going to tell you what credit is and what it means to you and what it means to me in common language. It's your ability to promise to pay. It's the ability to have the actual income to pay. Credit is a 3-digit number that is probably the second single most important set of numbers outside of your social security number that you'll carry with you through life. I'm going to let that sink in for a second, and I'm going to repeat it here in just a second. Your credit score is the single second most important set of digits that you'll carry with you outside of your social security number through life. Very important, would you say? There's an algorithm that's often used and going into the consumer understanding of credit, FICO, everybody often spits out and wonders, and they're curious, and they're coming up with these myths and these definitions of what FICO is. Fair Isaac Corporation is what it's defined as. Bill Fair and Earl Isaac are two older gentlemen who created an algorithm that provided a risk analysis for lenders to determine whether or not your risk to lend is exceptionally high or exceptionally low. It's an algorithm, guys, based on your payment history and your usage, your intent to pay. Whenever you approach a lending organization and you're standing there in the presence of that lender, your risk is already elevated, okay? Because you don't have what you need, so therefore you're gonna ask. That means you have to borrow, so your risk is already high. Depending on that conversation, as well as past history on loans, etc., will determine that scale of risk being reduced for your ask. I hope that makes sense. You're already risky from the point you come in. It's up to you to provide a history, support and documentation, and conversation to reduce that risk so that I have the ability to lend to you. That's risk, okay? Now, in order for you to have a good place for me to start defining what that risk suppression looks like, I'm gonna look for two things in a prong. There's a two-prong lending approach that I take on every single loan that I review. The first one is your intent to repay. I'm going to look at past history. I'm going to look at different lenders that has provided you money in the past. I'm going to look at your mortgage. I'm going to look at your car payment, your credit card payments. All those things are going to tell me what your true intention is as to whether or not you repay the money that you're asking for. The second thing I'm going to look at is the ability to repay. Do you even have the income or the money or the sources or means to repay what you're asking for? That's a two-pronged approach I take. If you can cover those, you get a green check mark from me. Now we just have to make sure that we're looking at term, rate, etc., to make sure it's justifiable for you, but also it deters any type of risk associated for me in the event that you do not pay. Okay, so that's what I look at whenever you walk through my door. That's how you should look at every single loan that you approach with any lender, not just Herschel, not just the credit union, but any lender out there. Why businesses use credit? I love this part. This is it right here. Startup, guys. Without seed funding, that's capital right there. Without startup, businesses may never be able to get off the ground. Never be able to get off the ground. Small business owners, they come from a variety of industries, okay? And they're at very different varying stages within their maturity or their stages of life. So therefore, the need for whatever working capital or capital may differ from every business owner. Mom and pop may need a new mower because they need to hire a new grass cutter because they just picked up a new neighborhood that they're going to cut, right? So therefore, their need isn't as significant as a print shop who just signed a 3-state contract that's going to take on a higher demand. So therefore, you need more, not only equipment, but you need to probably most likely increase your personnel or your employees. So therefore, you're looking at additional compensation. You're looking at a number. That's where working capital comes in, guys, because you can't just say, hey, let me borrow a machine for the next 2 years to print out all this stuff and make some money, and I'll come back and I'll pay you. No, that's not how the lending world works. That's not how it works, guys. You have to be able to show that you're one, you have every true intention of paying back the debt that you're looking for, and you have the ability to show that. And that begins with history, as well as you putting yourself out there to show, to say whether or not you have what it takes to meet that demand. You have to be honest within yourself before you can go and approach a lending organization to provide you with necessary funds. Growing your business. Businesses take out loans during an expansion phase. That can come in a number of ways. Let me share with you a couple of different ways that is, and we're gonna tap into some of these, right, guys? And feel free at any time. Like, forgive me before I dive in. The chat window, I hope it's open, and I hope, Robert, you got access to it, as well as anyone else that's assisting us. Harley, if you see a question that jumps out in that chat box, feel free to throw that thing out there with me, because I don't want to talk about things that's not relevant for the people that are going to be viewing, listening, and that are live on this webinar now. I want to make sure that I'm focused on those because they gave us that attention and they gave us that time to provide this information to them. I want to make sure that I'm hitting all those stakes for them. Okay, I want to make sure I'm hitting all those stakes for them. So please throw that out there, and we'll address it, and then we can come back to the content if need be. Okay. There's different ways that you can look at getting different types of funds. Personal loans, from friends and families. Those are traditional as well. You have to also sell yourself to friends and family, right? Just like you would a financial institution with a business plan whenever you propose your request for financial assistance. Personal loans from a financial institution, that's a term loan. Basically, you're coming in, you're saying, this is my business plan. This is what market analysis that I've completed. This is what I'm hoping to be able to offer to the general public as a service or a product. Me being one that reviews these types of requests, I'm going to go through it with a fine-tooth comb, guys. I'm going to see if your idea meets the market space that I'm hopeful to move into. If it's not beneficial for both of us, then it's most likely going to be, well, let's work on this, or let's see how you can get the funds without needing so much of mine, right? I'm going to start looking for alternative measures to make sure that you get what you need, but without so much risk associated with me. Okay. Additionally, you can have a line of credit. Lines of credits are typically used for ways to bridge that gap between the need and the demand. If you need something and the demand is there, you have the access immediately to go out and take advantage of making those purchases or hiring additional employees, etc. Now, I'm going to back up for just a second. I'm going to digress back to a word that I shared with you earlier, and it's called guarantor. Guarantor. That's a huge one. Guarantor is a huge one. Guarantors are typically used to sign as a commitment or a promissory person that will follow through on that payment should the business not be able to make that payment. I'm going to let that sink in just for a second, because I know that's probably a foreign word that I hadn't been probably heard of, but it's relatively used often in the business community. Guarantor. Guarantor means that you have the ability and the intent to pay should the business that's applying for this loan do not. And normally, it's one of the signers or the officers on that business that's supporting that request by signing the personal credit and the personal debt to say that I'll take care of this payment should this business not be able to. Guarantors need to be in a position where they have steady, reliable, and consistent income, and they must possess a credit score that shows that they've had a history of intentional on-time payments by way of providing the ability through income and resources to make those payments past, present, and potentially in the future. Guys, that's a lot to say for a guarantor. That means that you are pretty much the person that's saying, I support this business. If they can't do it, I can. So not only are you looking to venture into the business world, but you've got possibly some cleanup work to do in your consumer or personal credit and your income and finances as well, because we're going to look at those as well. We don't want someone in the realm of applying for a business loan that has no experience in the business community or entrepreneurship or starting a business or running or managing a business. We don't want someone that has a dream but no motivation, desire, or intent behind making that dream come to fruition. You've got to sell yourself to that financial organization whenever you walk in. It's like a marketing thing. Listen, guys, it's not easy, but it's not hard either, because if you're truly passionate and you put yourself in a position where you're giving your all to that business, it'll come out through that presentation. So I'm looking for a number of things, not just support and documentation, not just the intent, not just the ability, but I'm looking for body language. I'm looking for signs that there is life beyond this conversation for your business, right? I'm looking for a number of things. It's a personality thing. Does your personality match this business? What's your hierarchy going to look like? If you don't possess the talent to really truly understand the financials and the things of the nature, but you're the true visionary behind the business, I'm wanting to meet everybody. I need your power circle around you to give me comfort that if you can't answer the question to help grow your business out of the surviving mode to success mode, I need someone around that table that's going to be able to deliver that for me. Because again, the moment you walk in, you're risky. It's up to you and your team to reduce that risk associated with me cutting you a check and let you borrow money. I hope that makes sense. Can't see any picture. Go ahead.
A question, Herschel, and I think it's a good one to key off of where you're at. So you've talked about what it looks like when you're walking right off the street and looking to get started. How do we take someone who's been in business, has been using their personal credit, and now wants to transition that into a business line of credit?
I love that. Great question. So what I'll tell you is, if there's no standing or stable business credit already established, there's a great chance that that guarantor is most likely going to not only have to sign on the consumer part, justifying that they can support that effort, but there's a potential of securing that loan or that line of credit as well. So unsecured and secured lines of credit are options in the business world, just like they are consumer. Let me digress for just a second, because this will make sense here in a second. You go to a financial institution and you apply for an auto loan, you're going to get that auto loan, but that auto loan is secured by the auto in itself. So while you're paying on that auto, you have the privilege to drive that car, fuel that car, maintenance that car, wash that car, show that car off. But that is in reality not your car until you make that last payment in full. Does that make sense? That's securing our loan by the way of the vehicle. That means that the value of the car cannot exceed the loan. So should you default on that loan, I'm going to take that car back. And I know I'm speaking common language because this is the language that makes the most sense. I'm not going to talk over anybody's head. I'm going to speak directly to you. If you neglect to make those payments on that loan through that contract that you signed for your promise to pay, I'm going to be able to take that automobile back and redeem my losses and take and offset the balance of that loan. Okay, no different in the business world. If you show up in the business world and you make a request to apply for business, you're most likely going to have to secure that business loan by way of autos, real estate. There's a number of things that should be brought to surface if the risk is still too high, right? If your guarantor status is not as credible or strong as one would like to see, my next question is, what assets do you have that you would potentially like to secure to reduce the risk associated with your ask, allowing me to provide you funds to grow your business from surviving to success? And that's okay. That's not a slap in the face, okay? That's not a punch. That's just looking for ways to make it mutually beneficial for both parties, the lending organization and the asker in itself. There are other additional ways that you can apply for business credit, and that's business credit cards, okay? Same difference. You're going to most likely have to secure that with a guarantor signature, meaning that if the business doesn't take care of it, I'll take care of it myself. That's pretty much what it's going into. Did you have any follow-up additional to that, Robert, before I progress through the slide?
I think there's a little bit of a differentiator, right? The business has credit cards, but they're personally guaranteed. How do we make that final transition of moving it out of that personal guarantee into a business? And what are the things that the bank's going to look for to firm up that?
Great question. Thank you. That transition is powerful because the last thing you want is to maintain a lifelong relationship between your personal credit and your business credit. Once your business has been established and it shows a track record of positive gains rather than losses through depreciation or loss in itself through product or services, then you'll be able to balance the success of that business on itself. You'll be able to balance it on itself. The business can sign for the business itself without the guarantor, but it's almost like training wheels, guys. You have to prove your worthiness before we take those training wheels off. That's just like securing the loan with an automobile. 3 years, 5 years in, if you're making good headway and you're doing great, listen, it's time to review your request. Typically, it's after 5 years is where financial institutions like to review the overall loan balance and the scheduled payments, the maturity, etc. And if it's in a position to where the risk has substantially decreased, we'll release that securing hold on either your signature and allowing the business to sign for itself, or reducing the hold on whatever assets that we've tied up in an event to prevent that future loss. A lot of businesses, and I know this is well known within the business realm, a lot of businesses typically fail within the first 3 years. That's what financial institutions are wanting to get beyond. They want to get beyond that 3 years, and they want to make sure that you're credible with whatever position that you're in within the business itself. Also, were you looking to grow, and what are you looking to do outside of that? Because we want to make sure you have all the funding access that you need to grow that business. Because it and I shared this with Robert to the call and Bill on the call prior to. You never know, the next business owner may be offering a product or service that may change the world. You know what I mean? And you really truly want to be a part of everybody's dream and what they are hoping to accomplish. And I know a lot of people on the webinar, and a lot of listeners, you're in that successful aspiring goal, right? Right now, we're all accomplished, right? Robert's accomplished. He's got a good job. He's working with a good agency. I've got a good position with my organization. I feel accomplished, right? But we don't all feel successful until we meet the ultimate goal of our dreams. This may be for a homeowner owning a home. It may be for one of you all on the call is really truly being able to have the ability to grow that business to the next state. You know, you may be local, you may be accomplished in starting your business local, but the next move, I heard someone say delivering greens and vegetables in a different way, right? That's universal, right? Right now, you start local, you figure out what those needs, those wants, desires are locally, and then you tap into the market outside of that, and then you start, you know, slowly growing your business to where you're now feeling in that realm of success. You're like, I'm successful. I've now made my real big dream become reality, right? So that's a lot of what a lot of working capital, a lot of business credit will help you meet that demand, bridge that gap, and continue to shoot for the stars. Any other questions before I progress to the next slide?
I think there's some questions around getting started, right? So making sure that we're setting up that personal guarantee, that we're leveraging our own credit and assets for in a way that will ultimately guide us towards a business taking over that responsibility. And then if there's steps we need to do to repair our personal credit along the way, potentially, or if we make a misstep with the business, how do we get it back on track?
Okay. Obviously start with repairing your consumer credit first. That's easier than trying to repair business credit, because the business world and the business credit world is unforgiving at times, right? It's almost like if there's a fail out there. See, the consumer world is forgiving because we're human and we make mistakes. We make mistakes. We're giving second, third tries, attempts, etc., because we're utilizing our human nature as a response. Whenever you're delving into the business world, you're using a dream. You're trying to inspire someone to see what you see visually and emotionally. So that's a bigger buy-in. And majority of the times, more times than not, and I have to say this, and I'm being completely honest, there's not too often a second or a third time that you're given in the business credit world. It's really truly not as forgiving. Consumer world, you can have a vehicle repossessed and in 12 months you could have a new automobile again, right? See how forgiving that is. You could have a credit card collection account that closed out because you neglected to pay. Guess what? 12 months later, you get a new solicitation. You can go right back into it. It's not too often that you're going to get solicitations saying, hey, come and borrow $100,000, $250,000 from me to start up a second business while you were successful in your first. So that's where a lot of it boils down to, is work on your consumer credit first to show that you've got the intention, the motivation, and the desire to do right by not only yourself, but by those who are looking to potentially let you borrow their money. As a credit union, we're a co-op. That means that we're allowing other people to borrow other people's money. We're not in a position that we have shareholders or anything of the such. So we don't have big people making decisions for us that lines their pockets for more revenue and more profit. The money that we offer as a credit union is our members' money. So we have to be good stewards of those monies before we distribute those out. We have to be diligent. We have to be intentional. So therefore, whenever you come in and you make a proposal to borrow money, we are going to protect the interest of our members first, and then we'll definitely look at the proposal that you're presenting to see if it can be beneficial for not only our community but also for the organization and yourself. That was the second part to that question as well, Robert. Could you repeat that one for me?
Absolutely. I think you covered it with the fact that you can't repair business credit, or it's very difficult to do that at all. And then your personal credit is repairable, and it's best to focus on getting that to a point that can be leveraged to really accelerate the business. I think that talked a lot about what those questions were. I think the other part that we can talk about a little bit is when you do make that transition, are you using your EIN, or are there some special steps that you have to take to make sure the business is set up for utilizing its credit?
Yes, absolutely. It's called a DUN number. The DUN number is just like the 3-digit number provided to you in the consumer credit world. That number follows you for as long as the business is up and operable. Anytime someone runs that number, there's a community world of credit providers that report on that business and how successful those payments were, just like it would be in the consumer world. It follows you guys. You can't get away from it. It's also tracked by social security number that's tied to that DUN number. So you'll be followed through the credit world regardless of how you apply. It's just like in the consumer world, you can't change your social security number just because your credit was challenged or you made some bad mistakes and come out swing again with a new social security number. No, it doesn't work that way. It follows you. That number that you're provided whenever you apply for your first business form of business credit will be the number that's assigned to you for the duration and the life of that business in itself.
Do I have to go and apply for that DUNS number, or is it assigned to me?
Yes, you will need to apply for that, and then you'll use that number when applying for business loans. There's a lot of other organizations, financial organizations that apply for that number for you should you not have already done so. But typically it's through a lending organization that'll help you get that set up. And we've covered a lot of things that's on this slide just through mutual dialogue. This is why I like this stuff, Robert, is because, man, I can tell you, these slides are basically a foundation to lead conversation. I hate teaching from slides, word for word, verbatim. You could do this yourself. You could do this yourself in your living room. But if you don't have the proper engagement to offer dialogue in the form of what the context is that you're reading, then it makes no sense at all. You have to be able to really truly define what those words mean off the paper and in common language. Okay. Other questions, please throw them out. I'm here for you guys, not for me. I'm here for you all. So please tap in, ask whatever it is. Otherwise, we're just going to continue to move throughout the slides and just look at the different opportunities that could offer you. For instance, like the term loan that's up here. That's the one that I told you about, just a fixed maturity-based loan that says, I'm going to give you this for this period of time at this interest rate. That's basically what it is. But that's often backed by that guarantor signature that I was referencing before as well. Okay. Term loans are great, hard to come by unless, again, you do have an existing business that's been in operation for an extended period of time. Startups don't typically get a higher funding amount just because it's still new and refreshed. But I guarantee you that if you're in operation and have been in existing operation and you can show the track record and the success of that business, your ask is not too great. Your ask is not too great. There's a couple of local businesses here that Envision has gotten behind as far as financial assistance and funding them for their ideas, and I'm pleased, so very pleased to see and say that they have been very, very, very successful in their endeavors to continue moving forward and growing those businesses. Some mom and pop as small as $3,000, $4,000, $5,000 loans. No amount is too small. Just as no amount is too great, so long as you've got the proper documentation and you've got the track record to support your ask. I just recently completed doing in the first ever, I have to say, and I'm so incredibly proud that Envision looked at the opportunity to finance an auto dealership. How risky is that, right, guys? Auto dealerships are beyond risky, but the track record showed the history, the story that was shared with me, and the need made absolute sense, guys. But one thing I can tell you is that this young man was also in a position to have reputable personal credit. Okay, reputable personal credit. So he signed as a guarantor on this loan, which created less stress, less risk for me to be able to present and propose this to our lending team on the business side. And it was without question approved. They were like, grand slam. This is exactly the type of quality that we're looking for, the track record that we're looking for, and the commitment that this young man has put into growing not only this business prior to coming and requesting funds, but his personal. He's covered both. Good balance. One really quick plug before we move into additional information on the slides is I want to offer you all, and this is a grand offer, and I'd love for you all to take advantage of it. Through partnership with Domi, we've had the opportunity to create scholarships for those that are looking for building that foundation, guys. It starts with a dream, but with dream comes, you may have to practice some, okay? We can't grow, we can't be birthed from accomplished to success overnight. It doesn't work like that. As much as I want to tell you it's great and it works that way, it does not. There's a foundation that has to be developed, and we as two organizations have really felt like we're at a position where we have to close that gap and provide more opportunities for those that may be on the cusp of doing something great, and that may be you all that are watching or listening to this webinar. Scholarships are going to be provided to Domi Station on behalf of Envision Credit Union, because we are proud of what Domi is doing through the incubator process, as well as for those aspiring entrepreneurs. And we're passionate about serving the community, but more so serving those that help serve themselves. Bill, I think, may do some additional information at the end of this webinar, spotlighting and highlighting how to access that information for one of those potential scholarships. But I challenge every one of you, if you have not, take a few minutes and submit the request. The worst thing that can happen is no or not right now, because I can guarantee you that more opportunities will unveil themselves as this partnership continues to strengthen and move forward. And I'm so pleased that Domi has decided that Envision Credit Union was a viable partner to bring in whenever we started the conversation many months ago. And I'm so incredibly proud to be a part of this. I'm very passionate about what I do. Do not let me go down that rabbit hole. Let's get back to this slide, okay? Real estate secured loans are also very, 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 very useful. Credit unions typically don't look at the real estate portion, such as big banks do. Again, shareholders' profits for them is what drives them to make more riskier deals. Again, we're in a position where we have to maintain a sense of protection mode for our members' funds, because we are a membership-based driven credit union, just like all credit unions are. Real estate, I would say, if you've got some property or some inherited property or whatever the case may be, and you're looking to potentially leverage that property for future financing, I would say approach a financial institution of a greater scale, such as a Wells Fargo or a Bank of America. I don't know what their business lending model looks like, but I know that they're probably chomp at the bit to top some more real estate in the event you are not successful on your contract promise at the time of delivering funds. And I'm very honest, I'm very blunt. You will learn that through these webinars. I'm not walking on eggshells. I'm not that type of person. I'm very direct. I'm not going to make you feel less than, but I will be completely honest with you of what's taking place in the financial world. It's better for you to have this information than not have it and be surprised and leave, and you've got more biases against the financial arena than what already currently exists. I'm here for you. I want to help. I'm not saying that I'm a magic maker or a miracle worker, but I would do my absolute best to get whatever it is that you need to accomplish your task in life, and to make sure that you're providing for those that you love and those that you be taking care of long after you're gone.
John Brown has a pretty good question, I think, that tees off of that really well. So we're
Go ahead.
looking to get engaged as a business, and we want to make sure that we're taking proactive steps to getting that business credit set up. Do we go out and set up a DUNS early, and how do we start tying our activities to that business credit? And then additionally, with these companies, as they're starting to grow, they get opportunities and perhaps need to buy a lot of assets to execute on that order. So a large purchase order, for example. What are some of the options to be able to take advantage of that potential growth that they can leverage within the at a credit union like Envision?
Okay, that was a couple of parts. I need to read this question. Jesus, whoo, that was a nice one, man. Robert, give it to me one more time. I'm gonna. That was multiple parts to that, and I want to make sure I'm answering that question in its entirety. Otherwise, that young entrepreneur would have never proposed that question. So I'm going to make sure I dive in. Please give it back to me again, Robert.
Absolutely. So initially, what are some of the positive business credit activities that we can do to get started to raise our DUNS credit score? What are the activities, and how do we make sure that they're getting accounted for when it comes to the business credit?
I would say okay, hold tight right there for me, because I want you to repeat. I want to make sure I answer that in its entirety. What positive activities can we do to go ahead and start creating a positive movement forward for us to be able to apply for business credit, and possibly at that first attempt be told yes? That's what you're asking. I would say something as simple as a business credit card. Again, it's training wheels. Don't apply for a significant balance immediately. Allow your behaviors to influence and increase that balance. Forgive me, that limit to increase. I would not go out and ask for, $50, $60, $70,000, because it's most likely a potential that you could be denied that initial request. Okay, so keep it mindful, keep it realistic. I would say something as simple as $2,500, like you'd go to, if you were applying for consumer credit, you most likely go to a retail store, you'd go to a fuel farm, such as a BP or a Citgo or something, you grab one of those flyers, or you go online, you'd present a request for anything, 200, 250 bucks, 300 bucks, right? Just to start that initial consumer credit at a younger age. It's no different than your business credit at a young or birthday age, you right, or a new age, right? So apply small, go ahead and start creating some type of a foundation that shows that you have the intent and the ability to repay. That score is tremendous whenever it's pulled up. Now, you may not have the history that gives that lending organization comfort to lend to you a substantial amount, but my goodness, the work that you've done to lay the groundwork to secure that comfort from me speaks volumes whenever you walk in my office. I can tell you that from any lender standpoint. What have you done to prepare yourself for today's meeting? You start saying, and then that conversation may just very well end there, because there it shows me that there is no true motivation behind a dream that you'd like to try and make become reality. I need realistic supporting documentation to show that you've done some groundwork and you're ready to move forward from birth into inception, or from survival to growth. Second part of that question, please, Robin.
Yeah, I think there's Antonio posed a really good question that keys off of this last one. When starting business credit, will our personal credit history be used to determine that business credit worthiness?
It will be, absolutely. It will be, absolutely, unless you've already got an existing business that you would like to, you'd like to prop to see if the business itself is solid enough to secure those funds without the guarantor. But probably 9 out of 10 times of the submissions that I've presented individually on the business banking side, on the business side, without the consumer guarantor, signature has been sent back from the underwriting team to add that guarantor, or to solicit additional guarantors to secure that comfort that they're looking for. Underwriters are black and white. I'm not saying by race, I'm saying they're black and white whenever they're looking at reviewing the risk. So they're not gonna have any biases. They don't care what your business is. They don't care what, how passionate you are. They don't care that you've gone to chef school and you want to open a restaurant. They don't care that you've got 9 mores and you own 3, 1 more. They look at black and white, the numbers. That's what they look at to provide the lending organization with the risk analysis that determines. I told you before, the check marks come with whether or not you paid prior to. The check mark comes in whether or not you have residual income outside of this startup business that you're wanting to immediately start generating income. Do you have a full-time job, sir, ma'am? Do you possess a full-time job? Okay, what are your liabilities and your responsibilities and assets on your consumer side, right? Like, I need to know that stuff. That's what gives me the comfort to check those boxes. My underwriting team is just doing nothing more than securing the thought of the risk that I had before. All they're doing is confirming that. They're saying, this is the risk associated with it on numbers. Everything else, you determine on that. But I'm telling you, from a lending standpoint, the risk associated with this ask on the numbers is no good. Or it's right in line, or it's promising, or it's good to go. But it's up to you to determine whether or not you say yes, right? So it's a build-up. It's a build-up. It's not just a one-stop shop. I hope I answered that.
Yes, I think so. And the other question we had was, as you accelerate and you're growing your business, sometimes there'll be a purchase order that needs to be filled in order to do a scaling activity, meet that growth activity. Are there resources or tools that Envision can leverage when there's a purchase order or an asset that they can assign it to?
That's a tough one. So it depends on what type of business it is. Okay. So let's just talk in terms of, courier services. Are we all familiar with what a courier? So courier services typically deliver secured or high volume or liable products, such as pharmaceuticals, blood tests for your analysis, different companies, different things that they transport. That's a courier company. They're often utilizing large units with safes in them, so that in the event they're in an automobile accident, or they're robbed, and I told you I'm very honest, right? I speak in true color. This is me, guys. This is me. If you don't like me, don't come back, but I'm hoping you do, okay? Because I speak the truth. I try my best to anyway. If that courier service has an incident that jeopardizes the integrity of what's inside of that courier vehicle, they can be covered by insurance and things of the nature, right? But they take every precautionary step that they can to ensure that those items are transported in its safety. I say all that to say, there's 5 new pharmaceutical companies that's opening in Tallahassee, hypothetically. I'm just speaking hypothetically, right? And they've learned of this courier service and the integrity behind this service. They've been in operation for 25 years. They work with Capital Regional, TMH. I mean, they got all these contracts. They're the best of the best. That's who you want when you're moving into the area to ensure that you're meeting the demand or the expectations of the market that you're moving into. Okay, follow me here. There's an invoice that comes in from, forgive me, there's a new contract that comes in, or an invoice, you would say, that comes in from one of these pharmaceutical or companies that have solicited the work from this courier company that requires them to do 8 additional pickups and drop-offs in a week span. They're like, oh my God, I can't do that, plus honor the other 2. Okay, so obviously we know that we need additional what? We need additional units, cars, automobiles, right, to transport. We need new employees, right? We need all these things, right? Lines of credit are typically what's used to bridge those gaps that are short-term, not long-term. If you're looking at a long-term enhancement of your business in itself, you need to look at more of a structured fixed rate loan, okay, to purchase additional vehicles, hire staff, so that the residual or the revenue that's generated doesn't go back to higher variable interest rates. I said short-term fixes are needed, forgive me, or short-term fixes typically lean on lines of credit, because once that demand is filled, what are you going to get? Increase revenue and income so you can pay off that line of credit that you needed to utilize or access to fulfill that demand. Now, if you know that this is going to be a 3-year or a 5-year long-term contract and this commitment is only going to get bigger, you need to go and say, listen, I've got a contract with my with these 3 companies. They've already provided me with service dates. These are the contracts. These are the officers that signed off on these contracts. This can generate at minimum $12,000 for this one contract a month, $12,000 for this one. This is over $36,000 additionally that I'll be receiving. You propose that to me, I'm going to give you what you need. You've already got signed documentation to support your request that says that you're going to be able to meet the demand. If you buy those vans and with the money that I give you, I know you're going to pay me back. Damn it, I know you're going to pay me back. You already got the contract showing so, right? So again, I don't specifically say that Envision has a tool or resource that you can tap into, but we offer options that may help you overcome whatever financial hardship that you're experiencing within the growth of your business. I hope that answered your question.
It does. And I want to move, and we've already done it. Let's just officially move into the Q&A section.
Let's do it, man. I love this, man. Robert,
So
I hope you don't beat me up after this call, man, because, man, listen, let me tell you, when we started, man, Robert was like, all right, so the screenshot and the slide, and I'm like, yeah, I got it. And then here we are, the first 10 minutes, like, let's get all away from this slide and let's talk, man. These people, they want to hear from us and see what's going on. So, the Q&A, guys, we've already been into it for the last 35 minutes. I know we've been going back and forth, but this is a dialogue that I like. This is a safe space for us to converse and exchange some of our concerns, as well as some of our challenges, and some of our successes. What did you do to get over that hump? Who did you meet with? Would you be interested in introducing me to your financial partner, whatever organization it may be that they serve, be it a bank or a credit union? This is that time, guys. We've got about, I think, 5-6 minutes or something like that left on this webinar, and I want to take full advantage of it. And do not be bashful about asking something that doesn't make sense, because I can almost promise you it took me a while to make a lot of this make sense to me. And if I don't have the answer, I'm not going to tell you something that just completely negates everything that we talk. I'll simply tell you without question, I don't know, but I can find out and I'll get back with you. That's the person that I am that you have with you joining today from Envision Credit Union. Let's launch it. Let's get off these mics, muted mics, and let's talk, guys. Any questions any questions whatsoever, any questions that I can answer for anyone?
Well, I can tee it off and then we'll move right into those.
Oh, please.
There's, and I think you mentioned partnering in the organizations around the community. How does Envision partner with FAMU, SBDC, SBA, some of those other financial institutions that exist in our community to really leverage a complete vision of what we're trying to do here?
I love it. Love it. FAMU is obviously another credit union, FAMU Credit Union. We have additional credit unions and banks. Guys, in the spirit of doing what's best for the community, for the communities that we serve, we work together. Don't think the credit unions and banks are out here fighting for us to have your business or for us to take away your business. We're looking to help you grow your business. I'm working with a gentleman right now that has a business that just got returned back to me because the personal consumer credit itself was quite challenged, and within the realms of our policy, we can't commit to funding based on that. But I do know that there is an additional program that FAMU offers that just launched, right? That I know that I can work with their strategic lenders over there and say, hey, listen, I've got an applicant and a client that I could just not carry over the finish line. Can I provide you with all of their documentation, their intent, everything? I'm going to deliver this personally to them so that my client doesn't have to feel like they're being run around and showed and shared. So we work collectively together. Keith Bowers over at the school, he does a phenomenal job, but he and I work closely on him sending potential applicants over to me that have this idea. And I don't know if you know or not, but Keith, they offer quite the support on potential funding for those entrepreneurs that go through that program. They're backed, and they back us to say that if you do this, we'll do this, right? So that's how community partnerships work. It's not that we're competing to line our pockets with additional revenue. We're looking to try and loan these monies out to those, but strategically we have to work together to accomplish that overall community task, and that's together we're better.
Wonderful. And we have a couple individuals on the call. Is there anyone who would like to ask a question of Herschel?
I got one.
ahead.
Herschel, my question is, so my business is in agriculture, so it's a little bit different of an animal. However, I got an EIDL under me, so it's going to be there under me. So if I want to try to transition the business out of my credit, and I do, only because it's messing up my debt utilization. Like we own 3 properties, we have a lot of stuff going on. That's a lot of debt for me to carry, also on my social with everything else. So I need to move it somehow. But is because of the EIDL, will that make it harder? Do I need to pay that off first before I can move it out of?
No, because when you obtain, no, great question, Lisa. Thank you for asking that. So her question was, how do I transition because I'm so overextended on my consumer credit and my ratios? And believe it or not, Lisa, you're not in this situation alone. This is probably 95% of new entrepreneurs is that utilize that balance to prop their business, and they look for ways to get out of that realm because it becomes difficult to even satisfy your individual needs, such as buying an automobile or purchasing a new property for residents or things of that such, because your ratios are so off balance. Once
yeah, 34% debt utilization apparently is a big problem for them.
It's a huge problem, and those numbers may not mean a lot to everybody. Oh my God, you guys got to invite me back to we could talk about this stuff for days. You hear me? We could talk about this stuff for days, Robin and Bill, guys. It challenges a lot of our business owners at times, both in the consumer and the business world, whenever the ratios are so increased 34% as she named. That's huge in the consumer world. That's slow down yellow. You get more into 38, 39, 40%. That's red, because the closer you get to red, up in the 40% of ranges and ratios, you're closely looking at bankruptcy, and that's that nasty B word that nobody likes hearing, seeing, or even looking at. Then the potential possibility. So we look for you to reduce those debts prior to coming and applying. But in the event you use personal debt to satisfy the business, bring support and documentation, bring receipts, bring transaction records from your financial institution to show that you use those funds, those credit cards, and those purchases to prop the business, and the business loan will pay those debts off. Immediately, you will see a positive response with your consumer debt and credit, but with both of them going up. Forgive me, the debt going, consumer personal debt going down, consumer credit going up.
Okay, thank you.
You're very welcome. Any other questions? I think we got about 2 more minutes, and I'm going to turn it back over to Robert and Bill to close this. Any other question, please ask me. Don't be bashful. I won't bite you, I promise.
Antonio, I know you're just getting started with your business. Do you have any concerns immediately of how you start approaching the business? Credit?
Actually, I don't, not right now. I think the question I was most interested in having an answer to, I posed. I just wanted to know how, if I'm establishing my business credit, will my personal credit history be taken into consideration? And that seems to be the case.
Absolutely. Absolutely. Absolutely.
Well, Herschel, we truly appreciate you coming here and being with us. We've answered numerous questions throughout this, and I think that is, I completely agree. The key to this is connecting with these entrepreneurs and seeing how this applies directly to what they're doing, and is a large part of what we do at Domi Station. I'll hand it over to Bill Lixon, who will close us out for the evening. And I truly appreciate everyone coming and joining us today.
Absolutely. Absolutely.
I won't be as eloquent as Robert. I want to thank Herschel. This was awesome. I loved that you put the PowerPoint deck aside. This was like having a conversation with your best friend that knows things that you don't. And so your energy was awesome. And so I want to thank you from the bottom of my heart for who you are and for Envision's support of Domi Station.
Thank you, Bill. Thank you, Bill. Everybody that joined, I hope to see you next time. Watch for the webinar listings because I'm hopeful. Thank you. Thank you, John. That's my guy right there. I tell you, that guy.